नारायण के व्यूज आप सुन लीजिए, एडलवाइस इंस्टीट्यूशनल के हेड ऑफ रिसर्च।
I think there are 2-3 levels of uncertainty. I think one which you can put in a particular block, right, is really the whole interest rate paradigm, the inflation paradigm. Whether it is global, whether it is US, whether it is the monetary policy response that you've seen from the US and the response that you've seen from India. I think this in itself, I think creates a lot of uncertainty, as it were, because directionally you could go in many ways and the pace of that change could be very significant. It's kind of unprecedented that you have inflation at 7.5% as far as the US is concerned, and you have unemployment which is at a low, right? Which effectively calls for very strident rate hikes. You have a situation where India, from a policy perspective, is not mirroring what's happening in the developed markets. That also tends to open up a Pandora's box. One, India could be ahead of the curve, and the rest could fall in line, which is great. On the other hand, India might just have to catch up sharply, which could, end up in a significant retrace in the approach. So I think that's one level of uncertainty that you are seeing, which is the more upstated, which is more stated, which is more visible, right? I think the second one, which is more critical in terms of the more medium-term direction of the market, is what happens to demand in India. I think the jury is still out. You have segments that are tending to do well, but you have segments that are tending to do very poorly. There is a concern that the middle of the economy is tending to struggle a little bit. And I think that uncertainty from a medium-term perspective is probably more vital than what is the former, which is the rate direction. So I think there are these elements which are making it difficult to really call markets in the near term and to actually make calls like it's priced in or it's not priced in. From our portfolio perspective, we do believe there are a couple of themes that are running strong and are running hard, and you should be buying into them, as in when you get a price that you think is suitable. One is the technology space, which has actually corrected quite a bit. We just believe there is a very decent medium-term cycle which should kind of compel you to grab stocks that you're getting at prices that you like. I think the other is the banking sector setup that we have at this point in time. There is capital, you're seeing some sprinklings of growth, and you have valuations that are generally reasonable. So I think that's how one would play it. I think just set out in terms of themes that you like, stocks that you like, and then you wait for a price which you're most comfortable with. You never always get the bottom or the absolute price that you're looking for. But you should have that framework ready to go and make those purchases.